All right, so this video is a case study on how I am avoiding any kind of getting stuck in my bias. So, case study is that Wednesday I had a 2,600 per account loss on Wednesday, and recounting Wednesday, if I could even go back that far in this, is that, let's see, this is all today, this is Wednesday. Should be right. Let's see, 23rd, 26th, 28th. So this is Wednesday. Wednesday was a big mess. First, it started out good, and then I got stopped out, and then I started to really struggle by going long and it getting losses. Like this was me trying to go long, and then it not working out, and then go long again, and then let's see, this is the next day, but this is mainly the area. I try to go long and then get stopped out. Try to go long and get stopped out. And on any kind of pump, I was trying to go long. So the problem was I had a bias and I got stuck. I could not see any other outcome other than a long. And it was like I had blinders on, and it was really toxic to my account and everything, just because I thought that because the institutions were long, I mean, they are, and it kind of played out today, and it's going to play out next week. But as long as I got this day under control, I would have been fine. I would have been making a lot of money because I'm thinking, okay, now it's going long. Now we have an entry for a long. We have a change of character on the H4 for a long. And up until this point, we had an H4 bearish order block overhead, H1 order block, bearish order block overhead, and I wanted to go counter trend against the order block. So that didn't help either. That I was going against. So at the end of that day, it just made me realize I need something to get me unstuck with my bias, to like disagree with me, to where I would be like, okay, you know what, maybe I need to rethink this. And specifically the day that oh, I did not want to do that. I wanted to zoom in. The day that that happened was like when they cleared the order book. They basically took out the highs of the session. They took out the lows of the session, and it causes a lot of confusion, and it trips me up sometimes just because I'm like, what direction is it going? Like, I have no idea. And at the time, I was only using the 5-minute market structure break, and we'll see here, it gets really confusing, especially when they do that on something like this kind of overview. Here we could see we broke to the upside on the market structure, and then we broke to the downside, and I don't know, like we also broke to the upside here. So there's two bullish breakers here, and then there's a bearish breaker like shortly after. So it was really confusing, and there's a big range as to the distance it can go before actually picking a direction. So it would have been more beneficial for me to actually just. So what I remember that day is I had a position early on, and then I had it break even. And then once the price came back to stop it out, that's when I tried to get the position back again. And then ever since I got that position back, if I were to lose it again, I would double up and try to get that same size. Because like what was frustrating was I had a huge size in preparation, and I lost it. And because it was so big, I was thinking of the reward and the bias, which is like it's got to go long, it's got to go long, and I kept on chasing after it and doubling down, and it was the greed, the doubling down the size. That was like a huge sign that was a really bad move, where I doubled down the size without a safe entry, and this time it's not break even, and the rest is history. So that brings me back to kind of the case study. The case study is figuring out a way to not get stuck in the bias to where I end up chasing. And instead, it makes me think, like, hey, something's going on. And I'm thinking this is my key is this 15-minute market structure break versus the 5 minute. I need something to disagree with me in the day that I can listen to. And I think I can listen to a 15-minute market structure break. So practically, I had to do an overhaul on my alerts. So I had alerts on a lot of things, but looking back, um, I wanted to see what was something that I could use to like kind of clean it up, because I look at a lot of things. I look for a lot of confluences, so I need a hierarchy. So that brought me down to, in the case study for the alert system, to make a hierarchy. So I had to organize it. So there's alerts on this that's on this in this screen that's not here, and that has to do with the buy the dip, the pullbacks. So I really like the pullback alerts, but the thing is, like, I have pullback alerts for the 3 minute and 5 minute for an entry signal, and there's one right now. The thing is, like, during Wednesday, that day that I started to build a position, move it to break even, and then lost it, and then tried to build it back again for the same amount of position size, I was getting buy the dip alerts. And the thing was, that was the wrong kind of alert I should have been listening to. And I needed something that's like the chief alert for that day, that's basically my disagreement alert for the daily kind of bias. And I've learned that having these entry alerts, the entry alerts is a 3 minute, 5 minute sell the rally buy the dip. I need to be able to turn them on and turn them off, but only when it is suitable. And for example, if we're long, if we're assuming a long, then we need to just turn off the sell the rally signals until things change. And I set an alert for when that would change. So before we can do the market replay. So this is Wednesday. What happened Wednesday is we had a market structure break, and before it all played out, it was actually healthy. Let me get rid of that big candle. It was actually healthy. It was bullish. This one says bearish, but in my eyes, we were near support. So it made sense to go long. And then eventually it turned to something like this. So whenever we have this kind of movement, now a new set of alerts should come to context. So no longer am I going to pay attention to sell the rallies. I'm going to pay attention to buy the dips, because we're going to come back and retest, right? So that's kind of just the thing that, and then now we retested. We wanted to see what was going to happen, and we actually broke we changed the character of the market structure on the H4. So now we're focusing on buy the dips again, versus sell the rallies, because if we were to bounce back underneath or get rejected, we would need to see a beginning of a rollover. Instead, we got a huge close on the 4 hour. But now it's starting to roll over. But because we changed the character of it. We're instead of flipping short, we're waiting to buy the dip again, and so that's kind of why we turned off the sell the rally alerts and only the buy the dip. So that's one part of this, is that there's some alerts that are helpful and some that were just creating noise and like a little misleading. And on Wednesday, when I was stuck in my bias, it created alerts that were misleading. It created alerts that said sell the rally, and I only paid attention to that. And what was terrible was there was no alerts for. So there was alerts for buy the dip, but there was no alerts for sell the rally. Let me set that straight. So there was only alerts for buy the dip, but not sell the rally. So example. Only alerts for sell the rally, but not buy the dip on Wednesday. So this is Wednesday. New York Open is these. We'll get rid of the pivots. Market Open, New York Open was where the red dots are. Right here. And this is where they cleared the order book, cleared the highs and the lows. And then this is supposed to give me an idea. We had a pullback where I paid attention if it's time to buy the dip or sell the rally. So I got buy the dip alerts right here, and I reacted to that. But there was no sell the rally until the day was over. This is basically the end of the trading day, but we've entered lunchtime, and we got another buy the dip signal that made more sense than sell the rally. Here's a sell the rally, but it got squashed. And then we ended up going down again, but there was no sell the rally signals all the way until the end of the day. So this was, in essence, misleading as to a pullback in the direction. So it failed, basically, in its guidance. And then if we would take like a higher time frame of that version 2, we got buy the dip signals, but no sell the rally signals, which what was needed. I needed sell the rally signals. We got buy the dip signals, but no sell the rally signals. So I got misled by my signals on just the bias, and I already had a long bias. So this further supplanted my losses, in essence. So now I'm doing it to where I turn off the ones not relevant to the bias of the day. Now I have this in line with the chief disagreement indicator. I think that's kind of something we need, that if it disagrees with you, it's got either a high fidelity or something you trust, then maybe you should listen to it. And this is going to be my 15-minute breaker. And if we were to go back to the same time period with the 15-minute, that's this thing right here. We cleared the order book on the longs and the shorts and then the longs, and then we broke the structure on this 15-minute candle. And ever since this 15-minute candle, I should have been looking for shorts, and we didn't get any short signals. So technically, I should have been out of the trade all day Wednesday, but instead, I was chasing a long, doubling down for any kind of pump and getting wiped out. But if I stayed out, it would have been perfect. And then my current bias was long. It would have played out the very next day, and I would have been fine. I would have actually been in profit. And so this is more of a case study to help with the risk management and help make the losses small. And my chief, I didn't have a chief disagreement indicator. I just had something that either aligned with my bias or it didn't. And I looked for mounting evidence of what supported my thesis, and if it supported my thesis, that's what I was running with. And just by happenstance, if I can catch myself that I was doing the wrong thing, going the wrong direction, I would be able to stop it and prevent 3+% loss, which is it's like that. It's wishful thinking that I'm going to be able to do that and wake myself up and shake myself up from just that kind of bias. But sometimes when you build a thesis, you build a case, it's so convincing that you can't think of any other scenario or it being wrong. And that was kind of just what had happened. I couldn't believe any other situation taking place if if I if I was thinking it was gonna play out in a certain outcome. So I need something to disagree with me that I would listen to, and I was using the 5 minute, and the problem with the 5 minute is that you get a lot of alerts. I mean, I got 2 alerts even before we hit the New York session. New York session is what happened here in this gray box. London session is what happened here in this gray box, and we broke alerts. It looks like two times even before getting to the New York session. So we needed to filter those out, and I think the 15-minute market structure break is the way. And when it came to Thursday, the day after, we had a market structure break on the 15-minute, and we retested and resumed. And this is kind of what I need, is something that will help me see the right bias for the day, and something that I can make all the other signals a slave to the master, and the master would be this 15-minute market structure break. And the one part of the case studies that I was thinking about going short once we got up to the yesterday high. And when I was thinking about the master indicator, the disagreement indicator, I basically, when I set the 15-minute breaker as the master, the rule was you cannot go against the 15-minute unless the breaker is in your direction. And the break, it was a bullish order block all the way until here, to when it broke here. So it told me that I would have to wait in order to go the direction I wanted. And if I wanted to go against the 15-minute order block, I would need to go low and slow, like the lowest and slowest as possible, half of 1%, and that would have to count for my losses that day. But that's kind of just the problem that I had Wednesday, is that I needed an overhaul of my alerts. I had some false alerts that were too fast, that needed to be modulated, turned on and turned off at a certain time. So the 15-minute breaker is the new chief indicator. Now, for the analysis of just bias overall, weekly breaker, H4 breaker, is something that's really important. So, for example, we had a market structure break and then a change of character here on the H4 to the downside. Now it's the upside. So we're in a similar situation to where we're waiting for the retest. And so in this wait, we're waiting to see the conclusion of this. And this H4 breaker, or change of character, is not immune to being changed the very next day. And that's what exactly happened. This was a break to the downside here. So that was a market structure break to the downside. But we came to retest, and we actually broke all the bears that happened yesterday. All the bears that were there took profit and left. And we reclaimed to the upside to change the character. So now instead of retesting from the downside, we're retesting from the upside to resume up. And Now with the H4 breaker, we had a 15-minute. We're waiting for a 15-minute breaker retest. So uh, technically, we had one to the downside. We're waiting for a breaker to the upside, and that's kind of just the next deal. And if I were to chase after a long, I would have to tiptoe in, and that would have to count for my 1.5% risk if I were to lose for that day, just to cap the losses, cap the amount of losses for being wrong that day if I were wrong. So, and out of my alerts that could get me, so I mean, there was some signals to where I could have caught it. So here, I stopped doing lines over the daily resistance and support. So Wednesday, we pull it back. This is Wednesday. We actually the Wednesday is the big bar down. So if I had an idea of what was going on, which I didn't, if I would have done my daily support and resistance, I would have saw we're in a nest. So when we're in a nest of like either breakers or just daily support and resistance, a lot of inside bars or just consolidation, that it's winding up to go somewhere. So here's support, daily support right there. And then ideally daily support here. And as you can see, those lines are just slowly going up, but so is resistance on the opposite way, slowly going down. And you could just start to see the problem here. Like it's building, it's nesting. And usually these are like super terrible to trade. It just didn't see as a possibility that it was a bad idea to trade. But when we look at this daily candle, this is the open, and we went above, but then we reclaimed to the downside on this daily resistance. Next time, I'm going to have an alert on these daily support and resistances if we reclaim to the downside. Yeah, like it's something that seems obvious, but you know, when it comes to overall just charting, it just gets hard to see it as obvious. Um, you know, when you make these kind of mistakes, like I don't know, it just doesn't seem obvious in the moment. None of it does. Like no matter what time period it is, but it doesn't seem obvious. Now we reclaimed this. Now we closed above it. So on the day, it makes more sense to think that this is going to hold as support, which it is right now. So that was kind of just the problem is I didn't have any alert on the reclaim to the downside. So that was another issue, and I have a lot of these oscillators, and this oscillator caught it on the H4. It was saying here, oh no, it didn't. Yeah, it didn't. So then maybe I was overreacting there. That it did, but at least for any kind of reclaim on daily support resistance, like it's something I should be aware about, you know, at least to where I can make a better informed decision going forward with because these work. You know, it worked for the short. Now the signal it did catch was the on the short side. So if we take out the market structure here, we had some H1 short signals here. This is the part where when we cleared the order book Wednesday, we still had some short signals that worked out. I just didn't follow it because the 1 hour band was exactly in the middle. So I kept hope that a long was still in the picture. A long makes more sense when it's actually closer to the green band, especially also the gray band being closer to the green band. But I was holding hope that this was going to be the candle to push it to the green band, and it didn't. And if I had alerts on a reclaim for daily resistance, which is probably I don't know, right here or something, and it got back below, I would have had more attention on the sell side when I see it reclaim daily resistance. And then I would have looked at what kind of sell entries do I have, the hourly, and then what I got in, and then the rest I would have been able to profit from all that. So um, this kind of lesson was a little more to show, like, I didn't have any alerts on the reclaim of supportive resistance on the day to where I could check my bias there as well for intraday. And I think that would have been handy if I had a reclaim, a cross back down below daily resistance would have been a huge signal, like, hey, maybe I should be considering a short side. So all in all, like, and we had a 15-minute breaker to the downside. So all in all, like, I think if I had those alerts and if I had a breaker, a disagreement indicator that I would listen to, it would have been something that I would have been able to shake myself out of that bias better. And then we got the H4 breaker, which is now pointing us to the long side for a change of character. And then we're looking for either a 15-minute breaker to the upside or, we're currently at daily support, the flip of resistance to daily support. That it makes sense to look for longs. If we get we were currently broken on the 15-minute to the downside. If we get a retest rejection, I would listen to the 15-minute breaker to short. So that's kind of what I would do if it were to disagree with me. If I'm looking for longs, I want either an H1 or H4 or a 15-minute breaker to the upside. And if it disagrees with me, then that's probably a really bad sign. And I'll go for the opposite direction. So I think that's kind of just like the case study. The alerts I organized were my momentum oscillator for tops and bottoms. And then whenever those signal that I should mark out my daily support and resistance, and any kind of reclaim of support resistance is something I should listen to. And then looking for a 15-minute market structure break if needed be. And then another thing I organized were buy the dip signals, and by the dip signals I told it to look for a 15-minute market structure break. So you could see just kind of the buy the dip. I gave instructions: buy the dip, sell the rally, look for a 15-minute market structure break to the upside. So I made this not only like a chief disagreement indicator, I also made it as somewhat of a confirmation indicator for the other alerts. So I made this kind of the 15-minute market structure break the master and the chief disagreement for any kind of bias or thesis I have. It has to agree with me, or else like I don't trade, or I go low, like I go super slow, and that's to prevent losses. And these weekly and H4 are master of the 15-minute breaker, and that's kind of just the hierarchy of the overhaul I did for the indicators, because the alerts. Before, there was no hierarchy. It was just whatever matched my bias is what I followed. And if I built a case strong enough, that's kind of just what I hung my hat on. Now I have a hierarchy, and if it disagrees with my thesis, then it's something like a breaker. Like it's kind of like a circuit breaker to not trade at all, or to agree with it and trade based on price action. So that's basically the case study. And today's results was like $500 on the day per account for 6 accounts. So that was good. I'm reclaiming the 2.6 grand loss slowly, but it came at a very painful price. But I think it was important, because next time we get a move that clears the books top and bottom, I'll be more prepared. So that's pretty much the case study. Thanks for watching.